I would dare to say that a mild recession is the base case and pretty much consensus among C-suite America. That almost to me sounds bullish. So why are people still so negative?
Well, the market is, of course, forward looking, and yet we've never seen the market bottom before a recession. So we have that stat to contend with here. And I think there's a lot of hope that the relief rally that we've already seen is the start of something more significant. And indeed, it could be one step towards a bottoming process, but the emphasis would be on process, just knowing that bear market cycles don't tend to end in sort of a V bottom fashion. We usually need to see some more prolonged support discovery, and we certainly have not had that yet. I think, we have a situation where sentiment is somewhat complacent. You can see that, of course, in the VIX. And we also have overbought reading now after what we've seen already from the market. So the market is certainly challenged here.
Are there specific levels, Katie? I mean, you look at the charts. You use that chart history as a basis for kind of looking at how things might shape up in the future. Is there any indication in your mind about just how deep a pullback could go, areas of support, so to speak, that you're looking for?
Right. So the S&P 500 is right up into some resistance on the chart. This is a potential area of selling pressure of roughly 4,000. You can see that the 200-day moving average has acted as resistance in this past bear market. So we have it basically in play at this time, roughly 4,000. There's also another model that we track, the cloud model, that's roughly in line as well. So there is resistance in line. And even beyond that, of course, it's hardly in the clear. Below current levels, there are support levels that have relevance. The first one is 3,800 in our opinion. It's a short-term, somewhat minor level. If it is taken out, then we're looking back to the October lows, which also happened to mark about a 50% retracement of the uptrend that began off of the COVID corrective low. That's roughly 3,500. We are looking in our work for a retest of that 3,500 level and a potential downdraft even to the 3,200 sort of secondary major support level based on a Fibonacci retracement. And we say that because long-term momentum is still to the downside, and it's pretty rare to see breadth do what it has done. I know a lot of folks are out there calling it a breadth thrust and citing it as something that's bullish. We're actually a bit more contrarian in the way we view what's happened in terms of market breadth. There's an indicator called the McClellan oscillator that we track, and it's quite overbought. In fact, it's at levels that have been associated with short-term peaks with a lead time of about 1 to 2 weeks for the S&P 500.
All right, so you're seeing a pullback in the broader stock market overall. You haven't really changed your bearish tilt that way. I wonder, earlier in the show, we talked about the bullish moves in cryptocurrencies. Any indication from the charts there in your mind about whether the rally in Ethereum and Bitcoin can continue?
Well, we saw a 14-day rally from Bitcoin, was just outstanding in terms of the magnitude as well. And it did take out a short-term resistance level and cleared the 200-day moving average. So it certainly has our attention, and we do have upside momentum, short and intermediate term. But even just with the last day and a half or so of the pullback that we've seen, we see that as a reaction now to short-term overbought conditions that, as you can tell, we think will affect risk assets more broadly. So we want to see how far Bitcoin and others retrace. We suspect that they may see a full retracement of this sort of 14-day up move, and that it will look a bit like a blip on the chart. We say that again because that long-term momentum is still to the downside, and it feels like it's a bit speculative. There's, with that, the low reading in the volatility index, or VIX, which shows some complacency in the markets. We also have the meme stock getting some interest. All of that taken together gives us some pause in chasing any rallies here.